Let's bring on board Sarabjit Kour Nangra, VP Research at Angel Broking Pharma. Sarabjit, hi, afternoon. What is it that you've made of the Lupin management's commentary with regards to the Nexium delay and thereby the sales guidance cut?
Definitely disappointing thing, and more so because Lupin had been at one of the forefronts in terms of delivering numbers, and in the recent past, their profitability, in spite of investing heavily in R&D, had been improving. So with sales numbers not coming in, even though they're maintaining their profitability in spite of everything, I guess there's a bit of a disappointment. But I would like to highlight a point that it's mainly based on approval. So there is nothing structurally wrong with the company. Probably the factors of the stock had run up significantly. And it happens for a few companies that there are periods when you see approval slowing down, which we have seen in companies like Aurobindo, also Cadila also. So it's not a structural issue. But when it will come for the next year, probably it will more and less compensate for the delay also. So definitely FY16 would be a bit muted. And one thing which is going against Lupin is that the stock had already moved up significantly after Sun-Ranbaxy merger and with bad Q4 quarters. So I think it will adjust for both the factors that it is also not doing fairly well for this year, like Sun Pharma, and secondly, I guess that valuation adjustment had to happen. So I guess that's why the stock will react to it. But I guess they should be able to revert back to good performance, as they mentioned, from the fourth quarter and probably in FY17 onwards.
Sarabjit, but do you buy the fact that the management says that, growth will pick up post the fourth quarter and by early FY17, it'll be much better in the second half than it has been this year?
See, we have already seen US sale dipping for last 1 or 2 quarters more prominently. And it's not that the launches are not happening. It's just that the various big launches are not happening. And also, Suprax is facing generic competition. So obviously those two things are playing badly for the company. And they expect the current acquisition, which they have done, also to ramp up faster once it gets more, merged into the company, which is predominantly again US. So I think there will be levers which will get compensated as we move forward. That we are sure of. As I said, it's not apart from the Goa issue, which currently seems like a minor one and shouldn't boil down to a serious issue. I think unless that happens, I think they should be able to manage to bounce back at least by FY17. And also this current year quarter also they had 4 launches, but the launches are not happening at a faster pace. So it's not that they are completely not having launches in their basket. It's just that the pace is very lower. So that's why, and there is no big product happening. So both these factors and Suprax also facing competition is affecting them. So I guess those 2-3 factors, Suprax effect will go on by next year. Then approval should pick up, I guess. It never takes so long for approvals to get back on track, unless Goa issue, which we can't take a call, escalate to something higher. And the third is the acquisition that they have done. So I think these factors should stabilize the number in FY17.
Sarabjit, we just had the management, as Ramesh spoke with us just, a minute or so back. Yeah. And he's saying that he does not expect any stoppage of production from the Goa facility since observations there have already been resolved. Talking about Nexium, he said that the approval may come in post the fourth quarter and also showing approvals for US markets will be hitting revenues in the short term. However, he said that, growth will be much better in the second half versus what we've seen in the first half this year. And he does expect growth to pick up post the Q4, that's early FY17. What's the rating then on the stock? I mean, for an investor, wherein we are almost seeing a daily cut for about, 4 to 5% happen on Lupin, first yesterday on account of the Gavis acquisition and the numbers, and today on account of the, guidance cut. How should one approach the stock now?
See, as I mentioned earlier, Lupin had taken a good run post Sun Pharma getting merged and its numbers getting impacted. because it was the next in the run to take that leadership position in terms of financial performance which Sun was exhibiting. So now with Lupin also indicating FY16 to be not as robust as likely because of that high dependence on US, and even Sun has a high dependence on US. So both of these companies taking a knock for this year, and valuations currently the stock trades at somewhere around 24, 25 times. So I guess there is very little room for the stock to actually move upwards even if they normalize the business by FY70. So we are neutral from 1 year's perspective. Though we believe that, as company has mentioned, that they are in line to achieve their target of subsequent targets that they have set for themselves. I guess it's a matter of time that stock will exhibit some weakness post this commentary and for a couple of quarters. But any strong weakness should be used to buy in, but not at current levels. Current levels, we will suggest a neutral view on the stock.
This bank numbers out, and they have put out a profit of 1,980 crore rupees. Remember, expectations were rife that it would have been a pretty stellar quarter. Here's what the ET Now poll in fact had suggested: 1,950 crore rupees. So this has come in about 30 crores above what the street was expecting. And we are watching out keenly in terms of what they deliver for their asset quality as well as for their net interest margins, because it's looking like it would be a little bit muted. And I think the street had factored that in. The stock was trading pretty much in the red for the most part of the session, and as we speak you're not seeing too much of a reaction. It's just about flat at 583. That's where the stock is trading at. So this is an up move from what they delivered in the last quarter of 1,667 odd crore rupees. Net interest income, now we were expecting a number of close to 3. Okay, asset quality, let's address that first. Gross NPAs, and it's deteriorated. So 1.38% versus 1.34%, while net NPAs are at 0.48% versus 0.44%. So not a major one, but there has been deterioration. Hemendra Hazare